Christophe, thanks very much for joining us. It would be good to get your sense, particularly on the financing side. There's a huge amount of interest in ESG and impact. I suppose from your perspective, how are you seeing that influencing the financing side?
As alternative lenders, I speak as one rather than a traditional lender. We have a big role to play in complement what regulation brings about. Regulation is definitely required and necessary to impose the expense of improving buildings and meeting certain guidelines. But at some point it falls short of addressing the needs of the smaller end landlords who own the majority of the stock that does need improvement. And we feel that our role is addressing those borrowers with an impact lending program, which we launched last year with Fund number 6, and that is specifically targeted at incentivizing borrowers to spending capex in 4 areas. And if they spend, then the interest rate on the loan decreases up to 30 basis points approximately. We've targeted 4 areas of improvement for the built environment, obviously energy, and fossil fuel and total consumption. The third one is waste management, and we've added also water treatment and management. And the way it operates is we agree with the borrower a set of potential capex items, which, if spent and implemented, will give right to a reduction in margin. And we feel that it is really where we can help address the needs of the smaller end of the borrower community and the landlord community, which has impact not necessarily on the best-in-class assets, but in the best improvement possible and best behavior to bring about better quality buildings from a sustainability standpoint.
And how important do you think, Christophe, is this financing side in helping to achieve, particularly achieve the kind of transformation of some of the sort of older building stock?
Well, I think there's a big debate at the moment as to whether office stock generally is in need with working from home and other items expedited by IT improvements. But modifying and improving the built environment is definitely key. 40% of greenhouse gas emissions are real estate related. And however small our drop in the ocean is, we feel that this is particularly relevant to accommodate the smaller end of the spectrum and the assets that are most in need because they are more outdated and disregarded by institutional investors who have obviously a lot of equity to deploy and prefer to focus on new buildings and larger properties.
Yeah, it's really interesting, I think, to see this kind of initiative to avoid the sort of stranded assets that everybody's talking about. Really interesting. Thanks very much for joining us, Christophe.
Thank you, Richard.